Hello, good afternoon. Welcome to this webinar, Guiding SMEs to Success Through Business Planning. I'm Peter Towers, the founder and managing director of ESS BIZTOOLS. If you're watching this webinar on social media through the link which we have, welcome. If you have any questions or comments that you'd like to make, you will be unable to convert to me straight away. So can you send an email? Thanks, peter@essbiztools.com.au. For those of you who are watching live, if you have a question, please type it into chat and I will respond later in the webinar. Or if you're watching this webinar at a time more suitable to you and you have questions, then please send me an email, peter@essbiztools.com.au. We're looking at what an accountant or a bookkeeper should do relative to the preparation of business plans for a client. I think it all starts with a pre-business plan preparation. This is the approach that I've taken over many years of preparing probably over 1,000 business plans when I sit back and think about it, ranging from a public company, listed public company. I prepared their first business plan for them many years ago. And we started with this sort of process that I'm now going to refer to. First of all, you need to undertake some due diligence to understand the business activities. You need to understand those activities 1 inch wide, but a mile deep. In your dealings as an accountant, on a day-to-day basis with your clients, how well do you really know them? Do you know the systems, the practices, the processes? Do you know who their customers are, what their payment arrangements are? Do you know who's responsible for various activities within the organisation? My observation, having been senior partner of an accounting firm, was that for most clients, the accounting team did not really know much about them at all. Never been to their premises, never really understood what their business operation was all about. I think the challenge for accountants in 2026, which is just around the corner, is to be able to be the chief financial officer for your clients, to help them on their journey. So you need to understand 1 inch wide, 1 mile deep. And a very important part of this understanding is reviewing the internal systems, which I would like to think was based on the 52-week business enhancement system. And that's why we've included it in these notes for you to think about it. Because there's 3 main activities in a business. There's the daily activities, there's weekly activities, and there's monthly, and then it gets repeated again. It shouldn't be on the basis that once a year the client's getting a set of financial accounts and an income tax return. That does not help them run their business at all. So the daily information's a basic daily report. How many customers did we have yesterday? What was the average sale? What was the total revenue? What's the bank balance? How much money are we owed by debtors that should pay this week, and who are they? And what are the creditors or cash payments that have to be made this week? And that should be going to the leadership team. Now, I'm not suggesting that accountants offering a virtual CFO service actually prepare that report, but you would train someone within the client's firm, their bookkeeper, to prepare it. Make sure, though, that you receive a copy of it. And if you look at it and it looks wrong or you don't receive it, you follow through to see why. Because it's crucial when these systems get implemented that there is then follow through on them to make sure that everything's been conveyed. The weekly performance and profitability report is a vital document. And that's what the big end of town prepare all the time in their business. That's what Woolworths and Coles and many IGA franchisees produce so that they know the results. Contribution to the profits of the business, the key performance indicators and business metrics every week so that they can clearly identify if there's been a problem. Now, we're doing all this, going through this material now as a prelude to preparing a business plan, because I want you to be prepared. So you've analysed what's been happening in the past 12 months so you can properly advise your client on planning the next 12 months. That's the important aspects. And then we've got the monthly financial accounts, which should be compared to the budgets and cash flow forecasts. Review of current year's financial performance. This comes out of the monthly. Comparison to the budgets. Benchmarking comparisons to the top 20% performance. Our affiliate Tax Fitness produces a fantastic benchmarking package where they've analysed the top 20% of various industry categories. And you can compare your clients, not to the average. The average doesn't help them one iota. But if the top 20% categories indicate a gross profit percentage, for argument's sake, of 38%, and your client's only achieving 21%, it identifies a huge gulf that your client should be working to. Whereas the average might have shown that the overall average result was 23%. So your client might have been saying, oh, we're close. They're a long way away from the top 20%, which is what people should be aspiring to. If you're training a football team to win the next year's grand final, you'd be closely looking at the two teams that played in this year's grand final, wouldn't you? Or the cup final, or one that were the premiers, whichever football code you follow. You look at the top teams. You don't look at the average, because that's somewhere in the middle. Most people involved in football want to win the competition. That's why they're involved. So they should be looking at the top 2 or 3 teams. And what improvements are needed? So you're going back and taking a few hours to go back and look at how all this has been happening in your client, because you're then going to meet with your client's leadership team and directors to plan the next year's operations. You need to prepare yourself first. And then you need to look at the previous business plan. Hopefully your clients had one. If they haven't had one, well, we're saying we've got a lot of catching up to do. So was the action plan implemented? I believe that's the most important document in a business plan, the action plan or implementation plan or some other name. But it's where you have, or whoever was the author of that business plan has clearly identified these are the key things that we've decided are going to be done and by when. Your role at this stage is to make sure what was done. Were these things done? And what's been the outcome of that? Follow through. Just don't accept the tick. Then follow through to see, well, what improvements were made or what were the outcomes? And has the document been used as a dynamic working tool or just ignored? Has it been thrown in a drawer and forgotten about, only produced when the bank manager asked if we had a business plan? It should be being looked at every month at the leadership team and the board of directors meetings. So this is your research to see what's happened. The previous budgets, key drivers, cash flow forecasts, projected balance sheets. Were monthly comparisons prepared of performances? Where were the variations? What caused the variations? Was the budget for certain operations expected to achieve a 36% gross profit percentage, but in actual practice it's only been 29%? Why? What's gone wrong? Has anyone investigated it? Was it being investigated week by week during the year? Or did that process just not happen? Or was it found that there was a deterioration, but no one did anything about it? This is vital information for you to have when you walk into that boardroom and start going through planning the next 12 months business plan. Because this is not a a joke. It's not a exercise that we're just doing for the state of doing it so we can tick a box and say to the bank, we've got a business plan, or tell the board of directors we've got a business plan. This is serious. This is planning the future. And this is where you can play a great role as the accountant so that you can become the storyteller, but you're going to have to guide them through. And this is completely different to being the historian. You're now helping them plan their future, which is where all the action is. And it can be difficult, of course, because someone's got to make decisions. And decisions can be very difficult to make sometimes. Most times, in my opinion. And we need to make sure there's a rhythm of meetings within the business. Daily, weekly, monthly, those same terms again as the analysis of information. This is the meetings. The daily meeting of the leadership team might only be 10 minutes. Some of it might be by phones, that people are phoning in from wherever they're at. But it's really there to make sure everyone's on deck. Was there a problem yesterday? Has it been identified as a problem, and is there someone in charge of fixing it? Doesn't mean the whole leadership team needs to, but there's an awareness then that there was a problem. It might have been in a distant location. And you need to be asking questions when you're about to prepare a business plan, which is going to talk about rhythm of meetings. Were these meetings beneficial? The weekly meeting would normally take longer because it should be the review of the weekly performance and profitability reports, analysing what went wrong, who's going to find it, fix it, so that we all know what's happening in the business. The board of directors, if your client's got them, it might be a board of advice you could put there, and really, hopefully, it should be one or the other. Your client should be looking to have a board meeting or a board of advice meeting. How often were meetings held? What were the comments by the directors on the information they received? Are they just a social event to take up a conversation on talking about the football or the golf results? And have the directors ask for additional information to be submitted to them. That should then be incorporated within the business plan. I find at times there's a disconnect between board of advice and the leadership team, or the board of directors and the leadership team. And you need to find out these things. Being a director is not a social event. It's serious. That's why I believe our clients should be paying their directors, because they want them turning up with the brains intact, their thinking. And if they don't perform, at the end of the year, the chair just thanks them for their service and indicates that they're going to seek someone with some alternative skills or knowledge. And if they're being paid, there's no hard feelings normally. Business financing. Has the client received any requests, or I could word it a bit tougher, demands from banks or financiers whereby they're looking for more information? They want to know more about what's happening in this business. Do they want to receive a briefing on the business plan? And that should be communicated to the meetings when you get to them. So that's the preamble, finding out what's happened. What happened to last year's business plan? What was the result? So we then start looking at what we're calling Section B, business plan development. So it starts with a meeting with the leadership team and the directors. I'm a firm believer that the first meeting should have directors. So if your clients have got a board of directors, and one or two of them might be internal executives, so they would be at the planning in any case, but if a couple are external directors, I think they should be participants, especially in that first meeting, so that they can observe what's happening. They can make their judgments on the standard of the leadership team members. So you'd start off by giving them a State of the Union type overview. This is what you found from your summarising of what happened to last year's business plan. What had been the results? Now, some of these comments that you're going to make, they should already know. But They probably need to hear it again. But some of the things you'll find out, certain people may not know, and that's important that they do know. And explain how the business planning process will be undertaken. You would indicate that you have a series of questionnaires that you're going to be referring to as you work through, that you already know the departments of the business, but you've already got this feedback from what happened last year, and you're going to bring some of those results up as you get to them. Pardon me. So that your role is to coordinate this process, but not be the sole author. You've got to drag the information out of the leadership team and the directors. It's their company, it's not yours, what they want. And I see your role, you go away then and you write the plan and you bring it back and you bring it back to them. Ultimately, you've got to get their approval on it because they are the people who have the responsibility to implement the plan. So we need to destroy any concept that the business plan is just an act for the bank or for some lenders. It's for the survival of this organisation. They need to know where they're going and plan how they're going to get there, how they're going to finance getting there. So answer their questions in the discussion. So the utilisation of the business planning questionnaires that we've developed within ESS BIZTOOLS. I've listed some of them here. There's about 40 of them, covering all aspects of a business. So the review of the business means we would go through the operations. So if your client's got 10 separate business operations, you'd put them on the screen or on the whiteboard or in the notes you've handed out and basically be asking, how's this business performing? What do you think about it? Someone might say we should shut that one down. Okay, what caused that comment to be made? What is the decision of this meeting? The financial analysis. What has been the performance for the previous financial year? What are the key performance indicators, the business metrics? How does it all line up? How does it compare to a benchmarking exercise of the top 20% of the businesses in the category that your client's operating in? Tax Fitness, one of our affiliates, has got a fantastic benchmarking product, which you could look at subscribing to. And we, in fact, have a discount on that. You save $200 if you process it through ESS BIZTOOLS. So the current position for each business unit, we may have already covered that, but are there problems? Someone might say, well, the streets signs have been changed, so no one can park within 100 metres of our store anymore. So that might highlight that this business is not located in the right location. What's the objectives of the business? And the objectives might be slightly different. If you've got 10 different operations, because there'll be perhaps some different objectives being raised by various people. What's the technology? What's your position? How's your client going on AI? Do they understand it? Do they need more training? Is there things that they could implement quickly? What about the products and services that this company supplies? It would be great if you had some data. What was their expectation of production for various products and how many did they produce and what average sale price did they obtain for it? You might find that some people are saying, well, we should discontinue that line. And then the big one, who are their competitors? We need to have a SWOT analysis. What strategies are their competitors adopting? How is your client going to counteract them? What strategies are they going to implement? Now, this is a meeting of the minds in this process. So it shouldn't be a sit back and cross their arms and say, oh, well, the accountant's going to run us through all this. You've got to get them involved. You've got to get them discussing. And if they have a few arguments, so be it. Hopefully the right result will come out in the end. Not everyone will agree on everything. Locations. I mentioned location a little bit earlier, but locations are very important for business operations. Are they the most suitable? What's changed in that area that might affect that location's suitability? Has there been a traffic rule change or some zoning change by the local council or something? It can mean that a location that had been performing very well is no longer performing well. Marketing. Marketing's vital for all businesses. You know, some years ago when I was the company secretary of a public company that had been operating as a public company for 50 years, we employed our first marketing manager who never had one before. We didn't know what a marketing manager did, to be honest. And he had to go back to basics and summarize things. So we booked a local hotel's function room, and we all turned up, and we were in the meat export industry. So we had a lot of cartons, and we had operational plants at about 10 or 12 different locations around Australia. And what he'd found is that each of the areas basically had their own design of the cartons and picked their own colours. And colours on cartons are very important, especially in the Japanese market. And the wording. And in fact, some even had different names for the company. It was a great eye-opener of what could go wrong when someone wasn't controlling marketing. The same thing applied to letterheads. We didn't have websites then, but I'm sure the websites might have varied too. So you need to have marketing as a control mechanism. But marketing also these days, of course, needs to be across the social media, newsletters, communications. It's very important. So what are the strategies? Suppliers, what's the relationship like? Where are you getting the supplies from in this kind? Are they importing raw materials or completed products from overseas? Are the wars getting fought in Europe and other parts of the world, the Middle East? Are they affecting the supply chain? And does this mean that your clients having to accumulate more inventory in Australia to overcome problems that might occur because of shipping delays, and so that you don't grind to a halt in your operations in your factories or workshops in Australia? But what's that do to your cash flow? Because presumably those suppliers from somewhere overseas will want to get paid, probably before the product's even put on board the ship. So when you look at the 12 months in advance cash flow forecast, which should be getting updated every month with some real input and thinking to it, not just take last time's figures and throw them back in, really analyse, look at what's happening with debtors. Are the debtors days outstanding going up? What's happening with inventory? Because that might be forcing cash flow problems on the business. So what's going to happen down the track when a big tax payment's due and a few other things, maybe capital expenditure programs underway, and there's going to be some big payments? What's the effect on all that on the cash flow? Because this is the planning. The business plan needs to look at all of these activities. Customers. What's happening with customers? Do we get feedback from customers? Do we have customer advisory meetings? Who's the liaison with them? Who communicates back to them? Do we have customer specials? Do we run programs for our customers? Do we reward them if they introduce a friend? Team members. How's your client going on recruiting and retention of team members? Costs a lot of money to hire a new person and then train them, get them right, and then they leave after 3 months because people don't talk to them, or they haven't been trained in how to do the work, or some other reason. It's important that the team new member is bedded down. They understand what the processes are. They're doing interesting work. that will help with the retention of those people. So this flows, of course, into team training. I think every business should be undertaking team training. And the big one at present, of course, is AI. Making sure your team's familiar with these things, because they will be far better team members for you if they are. Let's look at financial management, and I've touched on a couple of these things already. The debtors management is vital. Now, as accountants, we know that, and I'm sure a lot of our clients know it, but do their team members? Within ESS BizTools, we have a debtors systems manual, which you can edit, change, perhaps put some different terminology into it. I've come across a situation where a client had color-coded everything in their office. They had the green book, which was the cash sales book. The red book was some other category, and so on. That's what people knew the names by. So you can have a adaptation of the manual which we're prepared to train the person who's in charge of debtors, just what's involved in the debtors management system. Because debtors management is very important. And we need to make sure that if you've budgeted on debtors days outstanding being 38 days, it doesn't blow out to 48 or 58 days, because that's going to cause your client enormous cash flow problems. And one of the other big areas is the management of creditors. If you've established that your creditors are happy if you're paying them, your client's paying them on a 36-day basis, and you get someone new in paying the creditors and they're super efficient and decide, well, we're going to pay everyone exactly on the 30-day basis, that can cause some cash flow problems because money's going out a lot quicker. So it's these items that need to be discussed and understood. What's the succession planning strategy within the business? Now, succession planning just doesn't relate to the CEO or the top leadership team people. It relates to everyone in the organisation, and succession planning is really built around promotion within the organisation. Most businesses find that if they can promote people within their organisation, they've got a stronger work unit. Now, it doesn't work in all cases, because you might need someone with specific qualifications or experience to undertake a particular role. But when you're looking at succession, it might be that your client's looking at saying, well, that person's now worked for us for 2 years. We should be moving them into another role, and we should be creating position. We should be growing the business so that we can achieve that. But raise it with them, because this is the business plan. They can think about these things. And all the decisions on the business plan are not going to be made in this one meeting. Research and development is very important. It's where new products are developed. It's where real value can be added to a business. It's into its goodwill, because it's developed intellectual property. And there is a process. So is your client planning to undertake research and development projects? They got any idea how many? Do they understand the system? The business plan should then be noting that they're going to undertake some planning and training in how to run research and development projects. You've got all the systems on that within ESS BizTools that you can train your client on the recording required, the documentation required for a research and development project. And I don't for one moment suggest that you're going to be helping conduct the research activities, because in most cases, accountants are not in the qualification areas to do that. Your role is more akin to being the internal auditor, to make sure the forms that are required, because there are forms required. If there's people working on an R&D project every day, there's a daily form required. What did they do? What did they discover? It's got to be recorded and filed away. First of all, so that the company can properly claim the research and development benefit, so they receive the tax offset, but also so that if and when they receive a tax audit or a audit from Oz Industry, who are the main knowledge group relating to research and development, that your client has got all the records. So we need to be documenting in the business plan research and development activities. And then we move to risk management. Well, there's risks everywhere, isn't there? A lot of risk in business these days. Your client should be identifying them, but raise it. You say in last year's business plan, we identified 5 key risk areas. Here they are. This is what the ongoing processes are. Are there any others? And you might be amazed what gets brought up around the table. Have we thought of such and such? Have we thought of such and such? And then the business plan might say, for some of these other items, we've identified these and a small committee's been formed to articulate a policy. So when you come back to review what happened in the following year, before you do the following year's business plan, you can make sure that all that's been implemented in our risk management strategies. So what's the sensitivity analysis? What sort of expansion could one expect? Who are the advisors? List them. Accountants, your role. Auditors. Lawyers. Engineers. Marketing consultants. List them and ask for comment. Is everyone happy with them? Or does someone want to know more information about their services? What's the capital expenditure projects planned for the forthcoming year? Has feasibility studies been prepared? Has the board given approval for these expenditure items to be undertaken? So what's the key objectives that you're identifying in the plan? What's the growth going to be? Is the growth going to be just at CPI, so around 4%? Or is it going to be 10%, 15%? And if so, is there thought being given to how that's all going to be funded? Because invariably, when a business is growing, it needs more funding. It doesn't all get converted into cash straight away. Is there some thinking that there should be more acquisitions for the business? What type of businesses are they interested in looking at? Who are they? Who's investigating them? And what about new product development? And this might go back to the research and development strategies. What new products are they considering? Has someone done a cost-benefit analysis, reviewed what's going to be undertaken? So there's a whole range of activities that come into formulating a business plan. You may need 2 meetings of this nature to go through that list and to get people to contribute. In fact, what I found over the years, some people get a bit stirry after about 3 or 4 hours in a business planning type meeting. So I find that it can be better to stage them over a few days, day apart, Monday, Wednesday, Friday, 3-4 hour sessions. I think you'll get a lot more out of the team that way, because it's allowing them to get back to their normal work. So you might do it at the first thing of a day, or say a 2 p.m. start, so that if they've got day-to-day problems they want to sort out as managers, they've hopefully done those first up in the morning, and then they turn up for the business planning. But whenever they're held, you want their brains to be in gear. They're relaxed, they've got some tea and coffee and whatever else they need, so that hopefully their brain's in action to be making suggestions. So you've done all that. You've got all their suggestions. And I think it's the time then for you to sit down and draft the business plan. Commentary on each key item. And then you submit the draft business plan back to them, the directors and the leadership team members, for review, for them to say, no, I didn't mean that. Or, oh, wait there, you haven't discussed this enough. We need to add more to it. whatever it is, it's important you get their input. So the meeting to discuss the business plan then is, I've noted that the documents submitted to and discussed. I think the draft document should be going to these leadership team members and directors, preferably 3 days before the meeting, so they've got time to read it and time to think about it. There's nothing worse than turning up at a meeting and someone thrusting a document in front of you and saying, well, we're going to be debating this in 5 minutes' time, so we need your decision. Doesn't work that way. So it's important that the leadership team and the board of directors have read the material, they understand it, and then they adopt the business plan. Primarily because they're the group that have got to now implement it. Not you. If you're the virtual CFO, though, you've got some responsibility, but you're not the sole preparer. They're signing off on it. And I reckon the signing off should be, we have a page in the business plan and it's headed up, resolved to accept as the business plan of XYZ Proprietary Limited by the directors, and have the directors and by the leadership team members. Because I think that's tying them to that document. They're committing now to implement it. They've been through the discussions, they've looked at 1 or 2 versions of the drafts, and they've now adopted it. And I'm sure that is going to make it more than a document that gets thrown in the bottom drawer of a cabinet and is not thought again until a bank manager happens to ask about it. It needs to be a living document that is going to get referred to each month, because there's a very important section in that business plan. It's called the action plan. The one you're going to be coming back and looking at in a year's time to see what the results were on the action plan. Did everything get implemented? And then go around and just check what the results of that were. Is it satisfactory? Because this needs to be a hard-headed approach to helping your clients plan their future with proper input. So the ESS BIZTOOLS financial forecasting package includes full details of the information that I've summarised here today, and a lot more. So you can prepare business plans for your clients. It's not a process where you say to the client, yeah, I'll prepare a business plan. You go back to the office and you get one you prepared for another client, you change a few details and you go back and say, well, they're in similar industries, this will do. It won't do. It's not what clients need. Clients need to have been guided through this process to think what they're doing. And it might take a couple of attempts to make this work over a couple of years. But your client's team's got to be involved in the process. Because otherwise, if they're not, and they read something in a plan, they say, oh, that's rubbish, that won't work. Who put this rot in here? There's no chance of it being implemented there. But if they've got a say, they've been consulted, they will make it work. They'll be able to explain various aspects of the plan to their foreman and sub-managers, etc., because they've been got to also implement. So you can visit our website, www.essbiztools.com.au, click on financial forecasting, and you can review the material that's included within financial forecasting to assist you to develop the business plan and to do a lot of other things. We've got a special promotion on at present, which is the finalisation of our Black Friday promotion, because we took a bit longer to implement everything that we said. And we're continuing our 75% discount until Monday the 15th of December. Close of business, Monday the 15th of December. 75% discount. Our original intention was a 50% discount. And then I read some articles about what the Small Business and Family Business Ombudsman had produced about the sorry state that thousands of SMEs are in around Australia. So we decided to add another 25% to our special promotion, hopefully as an encouragement to accountants to get involved in this process We're making it a lot easier for you. Your return on investment is going to be fantastic. But we believe it will help deliver services that SMEs badly need in Australia. So our offer to you, this subscription is for 12 months and will give you access. Now, the financial forecasting package, which is the big package as far as we're concerned, it contains everything you need, is only $1,050 for 12 months access, including GST. You'll achieve a very good return on investment. The advanced package doesn't include as much, of course, is $797.50 for 12 months, not per month, for 12 months. And the starter package, which doesn't really cover what we're talking about, but we've included there, for $372.25. To obtain the 75% discount, use the coupon code. So you just go onto our site and type in ESSBF75 and the system will automatically give you the 75% discount. That code's also shown on the website, but we just thought we'd promote it here so you know for sure you've got a discount code when you go to our website. If you require further information, please send me an email, peter@essbiztools.com.au, and either I or someone in our team will get back to you. I've already said it, but the return on investment on these subscription levels should be very attractive, as long as you perform the work, because you've got to generate that revenue. If you're new to advisory services, don't rush off and think you're going to get 20 clients next week. And so you say in January 26, we're going to go out and do 20 business plans. That's not the approach, because my experience over the years has told me that won't work. What I suggest is you pick one or two, approach them and get underway with the work. And then later in the year, perhaps into February, you might look at another lot and slowly start building up into advisory services. Of course, if you're already very experienced in advisory services, you can go for a larger number, but don't go taking on too much that you will not be able to support it properly, because that will be very detrimental to your advisory service progress. Now, another significant benefit in all this that I think is a very important benefit, and that is this work is interesting and challenging. It will help you in attracting talent to your organization. And probably more importantly, it will help you retain that talent. Because the work we're talking about here and the work that we've been talking about over the last 2 weeks in our promotional activities relative to the innovation journey all highlight the level of work that is required to support SMEs, to help them to thrive in their business operations, not just survive. We want them to thrive. And if they wish to scale up into a significantly larger organization, they're able to do so, hopefully with your firm being the ongoing accounting advisor to them. But they don't leave you and go off to some other larger firm because they're wanting to grow. You should be able to do those services for them. So please visit our website, www.essbiztools.com.au. Click on packages and pricing, and then click on the product package that you would like to look at in detail. My suggestion, the financial forecasting package at $1,050, including GST, for 12 months access is a very attractive price. So you can subscribe straight away. You can do it as soon as you finish watching this video. And you'll be able to start dealing with that material. Preferably, I'd suggest you go to the advisory services training package first and start working your team through that. But There's nothing to stop you generating revenue in the next day or so after subscribing to ESS BIZTOOLS. If you've got any questions that I've not answered in this webinar, please send me an email, peter@essbiztools.com.au. Have a great day. I look forward to hearing from you and welcoming you as a member subscriber of ESS BIZTOOLS. Stay safe. Goodbye. And if I don't talk to you again before Christmas, Merry Christmas and a very prosperous 2026. But obviously, I'm hoping that you're going to make contact with us before then. Have a great day.